Now let's talk about futures versus options and the different pros and cons. Some of the pros of trading futures contracts are the predetermined profit per point. Each 1 point move in futures or 4 tick move in futures returns a specified profit per contract. For example, an ESE mini contract pays $50 per point per contract. You could use these rigid numbers to reverse engineer your trading profit goal. Futures are also open around the clock. If you find yourself unable to trade during the day, most futures markets offer a slower paced overnight trading opportunity starting at 6 p.m. Eastern each night, with the exception of Friday and Saturday night, opening back up at 6 p.m. Eastern on Sunday evening. Futures typically have high liquidity and low to no spread. Many index futures are highly liquid and trade at high volume. When buying in, even with a decent amount of size, it is unlikely that you will be forced to overpay because of the spread, or in other words, the difference in what buyers want to buy at and sellers are willing to sell at. Also, there is no theta decay. If you have any experience in trading options, you'll find a refreshing difference in futures. In futures, trading your contract becomes more profitable based on how many points it moves, independent from the variable of time. If an ES contract takes all day to move 10 points, it's still worth $500. A SPY option contract purchased at the same time may be worth less than it was bought for, depending on the expiration date of the contract because of the variable of time. Some of the cons of futures are the high risk and learning curve because of the margin requirement. Many traders are unfamiliar with margin requirement when they first start trading and may find it a little bit intimidating or confusing. And also, the contract price of a futures contract never drops, which never opens up the opportunity for a massive low-cost, high-return gain, which is usually the sign of a successful options trade. Some of the pros of options trading are they're easy to set up and trade from an existing investment account that you may already have open. There's a relatively low startup and learning cost. For example, losing a options position that goes to completely worthless, the maximum loss that's occurred there stops with your options contract. Whereas because of the margin requirement on a futures contract, an unsuccessful futures position may go against you to the point where your portfolio is liquidated to the amount required to cover the losses on that position. Another pro of options trading is the variety of daily and long-term opportunities such as day trades and swing trades that can be discovered, identified, and purchased for a low price and return comparatively huge gains. Because options are available on many different indexes and tickers around the market, you can identify a low-cost opportunity that might return large rewards comparatively to your position size. Some of the cons of options trading that were discussed earlier are theta decay. In other words, the relation of your premium on your contract and its relation to the amount of time that has passed comparative to its expiration date. This is what makes options contracts that expire sooner, like weeklies or 0-day to entry contracts, subject to high levels of theta decay. There are often unknown and uncertain returns, essentially the opposite of futures, where 1 point is worth specifically one amount. Slippage and low liquidity, because some tickers and their options contracts are not traded with high frequency or high volume. You may be subject to lower liquidity, which makes it difficult to fill on your position, or slippage in where your intended purchase price gets skewed slightly higher to meet the ask of the available seller, and the inconsistency for day trading in relation to the other cons such as theta or slippage, whereas a chop day where the price ranges between a tighter range may be less effective than a trend day where the price moves consistently and smoothly in one trending direction.